Welcome to today's Market Cycle Outlook series of 5-minute videos. Let's look at the S&P. The last time that we were here, there was a possibility that the 20-week low had finally occurred here on the 30th of March. Bring in some data and see what's happened. We've got a cross of the FLD, which is confirmation that the low is in, and looks like price is doing everything it can to push to the upside. So what I was thinking in terms of the 20th of March being right next door to the equinox turned out to be wrong. My bias was towards the equinox rather than towards what was actually occurring in the market. We didn't get across of the FLD to the upside. Instead, price went to the downside, and that made it cyclically clear that the 20th of March was not the low. Let's update cycles and see what this looks like. So Cycle Master has selected a low back over here, which is not correct. That needs to be over here at the 20-week low. And I suspect that perhaps the solution to this phasing is to reconsider this 40-day low and move it across to the following low. Let's update cycles and see what Cycle Master says about this. Well, lo and behold, there we go. So we can tidy up some of this stuff. And like I keep saying, there's nothing wrong with being wrong except staying wrong. And clearly that wasn't in the best place. Cyclically, this now looks fine. 40-day low, 9-week 40-day low, 20-day. And that was the 9th of March. Okay, so where to from here? This is the bounce phase out of the 20-week low, and the thing that will be of interest will be how much bounce occurs. So a really strong bounce will break the all-time high, which was made up here. There's a situation that this 20-week cycle, this new 20-week cycle is in, that's different to the previous three, in that this is the fourth and final 20-week cycle in the 18-month cycle. We have a quick look at the weekly, and we can do some updating here, bring in some data. I've got a projection on here of where the 18-month low might occur, and therefore this 20-week cycle will push up. The question is, how high will it push up? And then when will it tip over to make the 18-month low? Now, the 18-month cycle is a larger cycle than the 20-week cycle, and therefore it's the boss. And at this point in time, we can see that we have an old 18-month zone here, which we can update. So to update it, we can pull in a 20-week arrow, and we can go update cycles. This will shift that 18-month zone just slightly where there's an overlap. So the right-hand side of these two orbs didn't shift, but the left-hand edge of this one did. And let's just get that date. Oh, that's a long way out. And clearly we'll be keeping an eye to this as time goes by. Actually, that zone's done. And that 20-week low occurred in its zone, and that was the 30th of March. Okay, so as I was saying before, the thing that matters now is the strength of the bounce. I'm anticipating that this 20-week cycle will likely be left translated. In other words, the high will occur before the half time of the 20-week cycle. So that's within the next 10 weeks. And not make highs after that. If that's the case, that will add weight to this 20-week cycle being bearish, with the ending low lower than the starting low, and that will fit cyclically with an 18-month low being due. After that, of course, once the 18-month low is made, there'll be plunge into the 18-month low and then bounce out the other side. Okay, thanks for watching.